In this video, we're going to talk about the updates on some of these trades. It is the New York trading session that we're trading now. It's May 24th, Thursday, 2018. So I apologize I didn't put one out late yesterday. We just relaunched the Trade Copier service on Tuesday, May 22nd. Brand new version of the Trade Copier service. If you'd like to get more information about the Trade Copier service, you can go to my homepage, and at the top of the homepage, you'll see a video. I apologize for the length of that video. It's about an hour and 45 minutes, I think, something like that. It's a Q&A session, and I basically talk about the service. I talk about how it's changed, how it's evolved, how I have evolved as a trader since 2001 when I first started trading. And it gives you a really good insight as to my personal opinions, my psychology, my philosophies on trading to a certain degree, my experiences, what has sort of formed me and shaped me into the trader that I am today, and what kind of results you could expect to get when you use my Trade Copier service. Now please remember, and I'm going to say this a lot, my Trade Copier service is not for everyone. In the past, I sold it at a price that made it very, very affordable for anybody, even with a $50 account trading balance. And that is not what my service is about now. It is not like that today. It is not cost effective for somebody who has a $500 trading account, the balance. It doesn't make any sense. If you go to my purchase page, you can see how much my Trade Copier subscription is on a monthly basis. And again, if you look at it and you see compared to what you've got, if you've got like $1,000 in your trading account, it just doesn't make any sense. This Trade Copier service is specifically designed for, and it's best suited for, an individual, a trader, who has the ability to execute and trade one standard lot, which is, we used to call it a 100K account. You don't have to execute a standard lot on every trade. You specify the lot size when you sign up to use my Trade Copier service. You can certainly manipulate and control what is executed on your platform. But what I'm saying is that, and what I want you to understand in the very beginning up front, so that you know that you're not wasting any time on my website or listening to my videos if it doesn't suit you, I just want you to know that it's more cost effective for the individual who can potentially trade a one standard lot. It makes more sense. That idea, again, you could get away with executing maybe a half a standard lot, the equivalent to that. Still make it cost effective. So again, look at the purchase price of my monthly subscription, and then if I'm generating anywhere from 400 pips all the way up to 1500 pips, and it averages, remember, it's going to change. That number is always going to change depending on market conditions. I can't say exactly how much you're going to make every month, but if there's a minimum of 400 to 500 pips made on a standard lot, you're looking at the equivalent of approximately, and again, depending on which currency pairs we're trading, about $4,000 to $5,000 in profits. So again, that makes it a lot more cost effective when you're looking at $4,000, $5,000, $6,000, or even 800 pips, right? $8,000, $9,000 in profits as a result of using one standard lot. And you look at the cost of the monthly subscription, it's definitely worth it. So that's where I wanted to take this service. It's for the people who are trying to use this money as supplemental income, and I'm basing it on what I understand and what I know, right, where I live in the United States. I'm basing it on that lifestyle and the standards and what the value of our dollar and what it gets you and your lifestyle. So somebody who's looking to supplement their income or fund a retirement, grow the retirement account, something like that, this is definitely the way to go. All the trades are 100% controlled by me. I trade for you. Basically, it's almost like joining a small managed fund. That's what the Trade Copier is now all about. I mean, that's the results that I want my subscribers to actually achieve. They're going to get what I get as far as the results. What we're looking at right now is a trade, more recently, the Euro Yen. And I was talking about a little while ago that I made some comments during the Q&A video. That's the one that is about an hour and 45 minutes. I talked about some of the techniques that I use. So I mentioned that in that video, I wasn't talking about the techniques, but I know that you want to see, if you're interested in my service, you want to see what it is that I'm doing. It makes sense, right? You should know what it is that I'm doing. So first of all, I never use a stop loss that's larger than 55 pips, ever. Now, I know that you cannot always execute a trade and expect a 55 pip stop loss to keep you in the trade, right? That's not going to happen. Sometimes the market's going to do what it's going to do. Price is going to react. Traders are going to react. And you see spikes that are obviously more than 55 pips. So sometimes it could potentially turn into a losing trade. If I can see, or I suspect that there's the possibility that a trade could spike against me, right, against my position, and hit that 55 pip stop loss, if I can see that that's a possibility, maybe the conditions, maybe as we're approaching non-farm payrolls or something like that, or it's, FOMC statement or Mario Draghi interest rate statements, something like that could cause that spike. If I can see that that's a possibility, then I'm just going to have to let the trade pass. Even if I've got a valid trade signal, if there's that chance, I'm going to let it go. So I do my best to control not only my behavior and my personal environment so that I can trade the way I do effectively, but I'm also controlling my decision-making process, taking into consideration is all available resources, all available information at that time, looking at the possibility of either the outcome and the aftermath of economic data or the possibility of economic data that would have an impact on my trade when I get into it. What time of day is it? What kind of volume levels are we looking at? Is it a holiday season? All these things that are going through my mind when I'm looking at these trades when I get a valid signal. So I'm not trading blindly at all, and I'm going to be very, very careful because it's my money too. The same trade that I execute on this trade copier service is the same trade that I'm executing for my own personal account. And I don't want to lose. I know that occasionally I'm going to experience a loss, but I don't want to lose. I don't like losses. I don't, a lot of them can be eliminated just by simply looking at a chart and saying to yourself, and I know you probably know this if you've gone through this yourself, if you even doubt or suspect at that moment, how many times have you gone through this? Because I went through this a lot in the first couple of years of my trading career. When I saw a trade and I thought, but I just don't know. I'm going back and forth with these things and these thoughts in my mind, and I'm thinking, I just don't know. It just doesn't look right. It just doesn't look right. I don't know. Well, I'm going to go ahead and try it anyway. And then when I would go ahead and try it anyway, that would end up turning into a losing trade. And I would think to myself when the whole thing was over with, why did you do that? You knew before you started that you probably should have just let it go. Doing that enough times with real money and losing tens and tens and tens of thousands, if not hundreds of thousands of dollars, you learn eventually to stop that behavior. It's not worth it. It hurts. It sucks. It's not fun. So you learn the hard way, if no way at all, right? You're going to eventually learn if you can stay in this business. This particular technique right here is the continuation breakout trade that I was talking about in that Q&A session, that Q&A video. And I actually I started the first half, part one, of a continuation breakout trade, and we were going to do the follow-up on the dollar Swiss. I'll show you that in just a moment, but this is, again, another trade. This is the daily time frame for the euro yen. And I mentioned that I look at 4 different time frames, the 30-minute, 1 hour, 4 hour, and daily. Now, obviously, I'm looking at occasionally monthly and weekly charts. Sometimes I'll drill down to like a 15-minute chart. It depends. But I'm not going to execute a trade off of those. I'm just going to be looking for certain patterns and signals. Obviously, if I'm trading futures, I'm going to be looking at different time frames because that's a different time set. So I use these different time frames for confirmation. What I'm looking at, again, with this candle that closed and printed this continuation breakout trade here on the daily time frame for the euro yen, this just confirms what I'm trading on the smaller time frames. So now I'm going to switch to the 1 hour chart. Here's the same continuation breakout trade on the 1 hour chart for the euro yen. When I trade the continuation breakout trade on the euro yen, the take profit level, the final take profit level is 150 pips. But I scale out at the first 80 pips. Always have, always will. I've been doing it since 2007 when I used to. So when I first started my trading services, I started offering them to the public on the internet. That was 2007. And I started with a trading course. It was a home study course. And I wanted mine to be better than the one that I talk about in my story about how I purchased a trading course when I first started trading. And it sucked. It was horrible. It wasn't fun. It didn't give me a viable trading plan so that I could start right away as soon as I was done with the material, this trading course that I purchased. So I was determined to make a trading course that was better than that and really helped people. And that's what I started off with. And then shortly after that, I opened up my chat room, and then I started calling out trades in the chat room, and then that led to trade copiers. So here I am today with trade copiers. So the take profit levels have always been the same way that I have taught them. Slight variations depending on the time frame, what's going on, if there's economic data, things like that. Obviously, you've got to protect yourself, and I teach how to be aware that price could be potentially changing the direction, and it just might not hit that take profit level. Why would you think in your mind, if you're going to execute a continuation breakout trade, if you think that it normally would go to the 150 pip take profit level, why would you suspect that maybe it's a good idea to take profits at the first 80 pips, right? That's something that I'm going through all the time, is I'm trying to protect profits. Sometimes it may not hit the final target, that final destination. I know that that's possible, but it doesn't mean that there is no profitability in that trade. It could still hit. So that's when I first developed these trading strategies, I started looking for places to scale out to protect my profits so that I was still earning something while I was taking all of that time, right? It takes a lot of time. So I very often will say that it takes just as much time for me to analyze, assess the market conditions, research, take a look at economic data. It takes just as much time to determine that I don't have a valid trade as it does for me to find a valid trade. Same thing, right? It just means that I might not get paid, right? If I spend 7-8 hours waiting for a trade setup and it still doesn't confirm, I don't look at it as, well, I wasted a bunch of time. I wasted 8 hours, 9 hours waiting for a trade and I still didn't get one. I don't look at it like that. I did in the beginning, but I don't look at it that way. I'm just doing my job, right? If I'm spending 8 or 9 hours and I still don't have a valid trade, and I say, okay, well, I waited all this time, economic data is out of the way, I've been waiting, still no signal, okay, I'm done for the day. That's a good day, right? I did everything that I was supposed to. I followed my trading plan, I didn't break any rules, I protected my capital. That is exactly what I'm supposed to be doing. That's what's going to keep me in this game, that's what's going to keep me trading for years and years and years to come and grow my trading account. Yours too, if you use a trade copier. So in this instance, what I want to talk about is that, and I am bringing this to your attention because I made a comment that even though I use a 55 pip stop loss on these continuation breakout trades, the 55 pip stop loss is the largest stop loss that I use. Even though I use a 55 pip stop loss on these trades, it doesn't necessarily mean that even if it doesn't work, or if the trade starts to fail, a continuation breakout trade, if I can detect that it's going to fail, I don't have to sit there and hold on to it and let it run right into the 55 pip stop loss. Now, when I thought about that concept, right, if I can see that it's going to fail and it might not hit the target, why let it turn around and run right into my 55 pip stop loss? But when I first started thinking that way, when I put together my trading strategy, this is back in 2001, when I put these techniques, and the continuation breakout trade, by the way, was the first technique that I developed. I developed that on my own. It was as a result of the experiences that I had in these chat rooms, and I was determined to figure this out, right, to figure out a trade. So when I was thinking about the idea that I should close the trade before it hit the 55 pip stop loss, then the concept of, well, doesn't that mean that I'm changing my trading plan? And I had to go through that experience and struggle with that idea for a while before I understood what was right and what was wrong. And what was right is whatever works, right? You've got to allow flexibility in your trading system, in your trading plan. But in the beginning, you have to stay structured and rigid and disciplined to it in the beginning. Otherwise, you have nothing to measure, nothing to quantify, nothing to... you don't have a controlled environment where you're testing your trading system. That's what I was doing, was creating a system and testing it. And in order for me to test it, I had to stick to every component and make sure that I was only moving or changing one part of it each time, and then measuring the results. And so again, in the beginning, yeah, I would let it run right into that 55 pip stop loss. But after a while, of course, when I became much more comfortable with my trading strategies and noticing how price is moving, how it's reacting over time, like I traded through the global financial meltdown, the Euro crisis, the Greece crisis, all of them, political events, all of these different events. I've traded through it. I can go on and on. I mean, you can see some of the videos in the YouTube channel. We traded oil futures in the summer of 2013. It was when they were, we had all those, the military was moving in warships into the Gulf. It was just a lot of different things that were going on there, and people were posting videos on Twitter, and you could see this stuff happen almost in real time as we were getting data and we were trading futures. I mean, it was relatively easy. And I don't mean any disrespect to people in those countries that they were going through those horrible situations and they had all of that military action around them. It was sad to see. Yet that's how the world reacts. That's how the markets react. They react to all of that activity, and we traded it with all that information. So, there was all of this different, these different events that gave me these different insight, and I grew and developed, and I saw these behaviors. So that's what I'm getting at, is that even if it doesn't hit the take profit level, well, number one, I can scale out at a specific level, the take profit level. And number two, again, if it doesn't work, I can close that trade out before it runs into that 55 pip stop loss. So I don't need to experience a 55 pip stop. If it fails, it might be minus 27, minus 37 points, or even minus 17 points if I can see it. However, in this instance, you can see what's going on here as you're watching it. This was a continuation breakout trade that was perfect. And it only hit, it fell about a pip or two short of the final 150 pip take profit level. No joke. Sometimes it'll happen like this. However, sometimes it will actually hit my final 150 pip take profit level, or if this was, let's say, a continuation breakout trade on the euro yen or pound yen, when I do that, I use a 55 pip stop loss and a 55 pip take profit level. Sometimes it'll hit that 55 pip take profit level and then stop and bounce and reverse and go the other way, the other direction, and then I get, a subscriber or a member that will say, wow, how did you do that? Like, how do you find these lows or highs where price stops right at your take profit level? Like, that's amazing. And it is to see, it's sort of interesting to see that happen, but I'm no genius at all. All I did was took the time to calculate the distances that it usually continues after I see a solid breakout, but it was based on what I was able to qualify as consolidation. That's where this whole thing developed, this particular strategy. It started with me testing different levels of consolidation. What was the appropriate high or low that would form the consolidation that I could trade? Either the one that I was identifying or waiting for to identify this continuation breakout trade, and then trade it with these all of these different metrics and all these different checkpoints, right? The stop loss, the take profit levels, the 3-point entry, all of that stuff. All of that had to be tested. I needed to know exactly how far it could potentially go afterwards. Obviously, I was taking into consideration the daily average trading ranges, which of course change from day to day, right? You can't look at it day to day. You've got to look at the averages. But that's what I was doing, and that's why it generally tends to stop and follow this type of behavior. It's the pattern. Very often you'll see me use the Fibonacci tool in here to measure and find these extension targets. Sometimes I don't have the advantage to use the Fibonacci tool because the price swings aren't there. You know what I mean? You get sometimes just a drop, and you've got to use the normal take profit levels on these continuation breakout trades. Now, again, this is my technique. I developed this. This is not something that's like in every textbook that you can go find, and it's just going to fall to this level. You've got to be aware of what it is that I'm doing if you're going to try and follow along with it. So this is my technique. This is my strategy. This fell 1 or 2 pips away from it, but it hit the 80 pip take profit level. You can see it right there. So when it bounced and didn't go any further, and then went back up again, and then bounced down again, then it was time to lock in profits. You don't want to play around with it. It's possible that you could just let it go thinking, oh, well, it's going to go. Well, if it's the second test, then it's probably time to lock in profits. I learned that the hard way too, right? I continue to hold on to some of these trades too long, and then they can reverse and go back the opposite direction. So let's take a look at the dollar Swiss. The dollar Swiss is one that I want to show you that did just about the same thing, and I had to follow along the same pattern looking for that take profit level. So this is the dollar Swiss. If you watched part 1 of the dollar Swiss trade, it was a continuation breakout trade, and I was talking about a couple of different things. I wanted to share with you, first of all, the take profit levels on the continuation breakout trade, but I was also talking about, in that Q&A webinar that's on the homepage, talking about my service and my strategies and my opinions and philosophies of trading. I was also talking about the fact that sometimes the euro dollar or the pound dollar or some of the majors, they might not give a good solid signal. It might look too choppy. You can sort of hear it in my voice where you're looking at the charts and you're a little bit perplexed, right? You're looking at it and you're thinking, wow, I'm working really hard to try and find a trade in here. When I felt that way and I said that to myself, that was the moment I needed to stop and relax and stop trading, right? If I'm working too hard and it's too hard to see what I'm looking for, then it's probably a good idea to stand back and let it go, right? Stay away from it. Just get out of the way, let it move around, give it another day or two. I know how hard that is to do that, to follow that procedure. I know how hard it is to sit on your hands and only stare at the charts and only watch price, watch the news, watch how everybody reacts to it, and not participate in that. It's hard, right? It's hard. You want to get in there. You want to do your job. You want to do your thing, what you're passionate about. But if you don't understand what you see and you're struggling, there's a greater chance of you just executing a trade that you don't understand. It's in the wrong place, and it's going to be a failed trade. And then the end result is that you just lost money. You're even worse, right? You're going to be in a worse position. You're angry. You wish you wouldn't have done it. You knew you shouldn't have done it, but you did it anyway, and then you're down more money. All of that just is a horrible situation to be in. And I did that so much in the beginning of my trading career that there was only one other thing to do, and it was just to stop doing it. There was nothing left for me to do. I had to stop that behavior. I lost too much money. And what I was talking about in that, when I was describing, the thought process behind when I'm struggling to find a trade, I mentioned that sometimes the euro dollar, the pound dollar might not give me a really good trade signal. I can see some of the signals, but they're not lining up right. They don't look right. I don't have confirmation. They still look too choppy. And if I just look at maybe another currency pair, and that's why I select the currency pairs that I do when I trade, if I just look at another one, very often one of those, not all the time, but very often one of them will make more sense. It just looks a little more clear at the moment. And at the time that I was making this video, that was the day that we had relaunched the trade copier. I think this was late May 22nd, during the Asian session, I believe. This setup, we were in this trade, and this setup was here, and I was talking about it. So this is, again, the dollar Swiss. This is the 1 hour time frame. This is the continuation breakout trade. And it looked a little more clear on this pair, the dollar Swiss, as opposed to trying to trade the euro dollar and the pound dollar. Now, obviously, if I went to a larger time frame, things might make a lot more sense. But if we're just looking at the 1 hour time frame and to just show you the setup that I'm using, I wanted you to understand what I was talking about. And that's why I select some of these trades. And I mentioned that I don't always get a trade signal, or I trade that often the dollar Swiss. But occasionally it will make more sense than trading the euro dollar or the pound dollar, because there's more clarity there. As far as the technicals and what I see, I'm not struggling, and that's the one I'm going to go to. Now, I share all of this with you, and I know I'm rambling and talking quite a bit if you've already heard it before, but I want you to understand my thinking, why I trade the way I trade, why I ignore one currency versus another. Even though it might, that currency pair might work or might move or might rally for the day, if it looks too choppy for me, if it's too risky, if there's just not a lot of decision, if it just looks like, the rest of the market, you can see a lot of market psychology in the patterns that we see on the charts. If it just looks like a lot of nonsense and it looks too hard to read, I learned the hard way, stay away from it. Just get away from it. Just walk away. I say that quite a bit. Is one of the biggest advantages that I have, and why I'm able to close every month without a loss, is that I know when to stop trading. I learned the hard way. I learned by losing tens and hundreds of thousands of dollars. I've said before, I've estimated that it cost me about $300,000 in real money losses to learn all of this that I'm sharing with you today. I made money during that time. Of course I did, or I would not have been able to continue to trade. It wasn't like straight $300,000 losses. It wasn't like that. But the estimated, all of my losses like that, they would total approximately $300,000. I know it's like saying the cumulative number of years when there's 2 or 3 traders and they say it's like 100 years and that kind of thing. It just gives you an idea of the amount of loss that you could potentially experience. and looking at all of those numerous losses, not just the dollar amount, but the number of trades that I had that were losing trades because of my behavior, you get to the point where if you can stay in the game, if you've got enough money, sufficient capital, and you're learning to protect yourself, you start making these adjustments because you have to. You don't have any other choice. So that's why, again, back to what I was saying, I have the advantage to close every month with a net gain every month, just simply because, and not the only reason, but simply because I know when to stay away from the market when it doesn't make any sense. I won't get in there, even though I know I have subscribers and investors and my family and me personally, I've got these goals, right, every month. But there's no way that if I write down a dollar figure or a number of pips that I want to make each day or each month, there's no way, I don't believe that I have to hit that number or I fail, right? If the market's not providing that opportunity for me to achieve that number, then I can't do anything about it. Otherwise, I'm going to be forcing trades, and that's where a lot of traders, I think that they get themselves into trouble. I know I did, because when I first started trading, I started writing down, okay, I want to make 40 pips or 60 pips every day. But if I had a few losses in a row each day, then there was no way I was going to have to make up the losses just to make up and get to the point where I could be at break even so I can make the 40 pips that I wanted for the day. So it changed my behavior. I had to change my approach. I had to change what I was using as a goal for the day. I talk about that in one of my videos, so I won't go down that road. I want to talk about the trades here. I'm sorry about that. But anyway, it gives you an idea of who is trading for you if you use my service. It's very important that you know what's going on, right? It's your money that you're putting on the line. You're trusting me to trade it. You need to know just what the hell I'm all about, what I'm thinking, why am I doing what I'm doing? You need to know what's going on. So I think it's best and it's appropriate to share my thinking behind this. So again, back to the dollar Swiss. If you look at part one, I talked about that even if it doesn't hit the final target, the 55 pip take profit target, even if it doesn't do that, well then I'm going to have to find another place to scale out at. Normally, so the first trade that you saw was the euro yen. The continuation breakout trade on the euro yen, just to give you an idea, my targets are 150 pips. That's the final target on the euro yen. However, I scale out at the first 80 if it looks a little strange, like it did, and it didn't necessarily go down, and it doesn't look like it won't go down and hit that final target. The pound yen, GBP/JPY, that's different. The continuation breakout trade on that one, my final target on that one is 250 pips. But I scale out at the first 150 pips. Now, for obvious reasons, that's why the targets are so much further. That one we refer to as the Beast. We've been calling that one the Beast in my chat room since 2007. And by the way, the chat room is no longer open to the public. I don't offer it. I only offer it to coaching students. My coaching is very expensive, and I don't do that. I don't offer it to the public anymore. So what I'm talking about is when I first opened my chat room in 2007, a lot of my subscribers and my students in the chat room were calling it the Beast because it moves so fast and so far. So 250 pips is the final target on the breakouts, on the continuation breakout trades for the pound yen. It's an awesome trade. I mean, it's exciting. You're going to get some of those. They do happen. They don't happen all the time, but you're going to get some of those trades in your account. Imagine a 250 pip move, standard lots in your account, right? That's awesome. You're making a lot of money. So again, but I'm scaling out at different locations. When I trade the continuation breakout trade on the majors, I consider the majors the euro dollar, pound dollar, dollar Swiss, and dollar yen. When I trade the continuation breakout trade on those pairs, it's 55 pip stop loss, 55 pip take profit. Those don't move as far as the others, like some of the crosses. They just don't always have the ability to move that kind of that distance. I know because again, I calculated how far the daily average trading ranges and how far it usually goes, price moves after a breakout like that. The breakouts that I have qualified as the appropriate breakout levels, highs and lows, consolidation, all of that. Anyway, I won't go down that. I'll explain that. And if you want to learn a little bit more about my continuation breakout trades, again, I have my book on Amazon, and we'll go into the details of how I quantify and qualify consolidation and all of that on the different time frames. So in a situation like this, with the dollar Swiss, if I'm going to scale out and I'm looking at a 55 pip take profit level, well, the first levels that I usually scale out would be 20 to 25 pips, just to make sure that I'm locking in profits there. However, if it looks like it's going to go close to, or if at the beginning of the trade it looks like it's going to hit that 55 pip take profit level, then I'm obviously going to let it move and let it work, right? I've got to give it some time, let it move. These are 1 hour candles. So you can see just how many hours passed for this to actually unfold. You can go back to, again, part 1 of this particular currency pair trade, the dollar Swiss, 1 hour time frame. You can see the exact same points here. The only thing that was different is my assessment after time passed. When it spiked down here, my final target was 98.89, 55 pip take profit level, right? That low right there only went as low as 93 or 94. So it came pretty close, but not close enough, right? About 4 or 5 pips away. And then it bounced, but when it came back down again, that's almost like the same pattern that we saw in the euro dollar. It bounced, almost hit the take profit level, went back up again, and then came back down again. And then it's time to say, hey, wait a minute, this is the second time. It may not hit that final target, but we're still up money. We need to lock in that profit. This 00 right here, that's a major psychological level. I trade and use psychological levels all of the time, especially intraday. If I'm looking for, and I'm working around pivot points, you can see that I have the pivot points here. I have strategies to work around the pivot points. But I'll use the 00, I'll use the 20, the 80, the 50. Those are psychological levels. I've always used them. And so when it came back down to approach that level, it didn't look like it was going to hit the 89. I didn't want to trust that it was going to hit the 89 or not. I wasn't going to let it go. And there's no reason, again, if I'm up money like this after all of this time, I've got to get paid, right? I want to get paid. I know that the profits are there. I locked in profits here at the 00, 99.00. That's why that price tag's there. However, I want you to be aware of what's going on when we step back and we take a look at this and we assess everything that happened anyway. On the initial breakout trade with the entry of 99.44 and a take profit level of 98.89, there was my stop, 99.99. 55 pip stop loss, 55 pip take profit level. If we look at and we step back and look at the bigger picture here, regardless of what I did, the only reason why I did what I did is it was still choppy, and I mentioned that in part 1 of the videos that the euro dollar was choppy, the pound dollar was choppy. This one made more sense and it looked easier to see, but it was still a little more choppy. And if we looked at the larger time frames, we could see that in addition to what was going on with the dollar. And I mentioned that in part 1. So that was one of the other reasons. If I see that it's still, even though I get a signal and it looks more clear on this one, I still have to take into consideration everything that's going on. It's still a bit more choppy. The market, the conditions, the overall conditions were still a bit more choppy. Time to protect and lock in profits. However, it ended up hitting the 55 pip take profit level, and it did not hit the stop loss. That low right there, a few hours ago, let's see if I can get that in there. It went as low as 85. So it hit the take profit level anyway. However, again, I'm looking at how many days pass before this actually happens. Normally, with my trade copier service, I'm day trading. I expect to have the trades hit their take profit level within the same day. Not necessarily within the same trading session. That doesn't always happen. However, I'd like it to, just like we would all like it to. It's a good day when you get into a trade and it hits its take profit level within 3 hours and you're all, I'm done. I did, that was great, right? I made 40 pips, 100 pips, 200 points, whatever it was, whatever the move was. Those are good days. However, it doesn't always work that way. So taking into consideration a few more days, that's something else that I do look at. Now, I've been asked the question, does time determine what I do with my trades and if I should close the trades out earlier? It does not usually. However, if it looks choppy like this and it bounces down like this almost to the target and then turns around and almost goes back up to the stop loss and then comes all the way back down again, that is a pretty choppy market all within a 24-hour period. I need to start paying attention to what's going on, right? It's still more choppy. It's telling me something. The conditions are not ready for these trending breakouts. I mean, it might be trending for a session or two, but overall, we need to take a look at the larger time frames. We need to assess what's going on. Is it political that's causing this? Is it the anticipation of economic data that's causing this? There's a lot of things. Now we got to go back in and start digging into what could potentially cause this breakout or a more fluid move where we don't see this type of choppy behavior, and then I can just simply get into a continuation breakout trade and not worry about scaling out, and it'll move to the take profit level relatively smoothly and within a few hours after some economic data. That's usually what happens, but it doesn't always happen. So this is the follow-up to the dollar Swiss. It worked. We made money. I closed it at the 00. So to give you an idea, if you see a continuation breakout trade and you're using my trade copier service, and later on you see that it hit the take profit level, but you see this kind of behavior, you'll know that I'm protecting my profits, I'm protecting your profits. I want to make sure we get paid. And there's going to be another continuation breakout trade, and I'm going to get an opportunity to let it go straight to that 55 pip take profit level. It happens. When I say it happens all the time, what I mean by that is I'm taking a look at all of the trades that I've had since 2001. So it happens all of the time, but it doesn't happen every day, and it doesn't happen every trading session. And there are some weeks where we just don't get any continuation breakout trades. It's possible. The continuation breakout trade, I'll briefly touch on it. Very often, the best results with that technique develop with or around economic data, because it's the economic data and the reaction, traders' reaction to that news, that causes the move in a more fluid, consistent manner. There's more volume, there's more participation, so price fluidly or consistently with very little retracement will go to its take profit level. Those are the trades that I like. Obviously, I can't make it happen. All I can do is just take a look at the economic calendar, look at my setups, and then anticipate and wait for that. That's something else you might notice, is that if I don't trade during the Asian session, but there's some activity, but we're waiting for, let's say, non-farm payrolls, and I don't really have any solid signals, then I'm probably and likely waiting for the reaction to non-farm payrolls and then looking for a setup there. Because very often, and you've seen this in some of the update videos over the last few years, after non-farm payrolls, sometimes I get continuation breakout trades. All I have to do is sit and wait, so I don't have any trades during the Asian, no trades during the London session, and then I wait for non-farm payrolls. Afterwards, I take the trade, and I can take 3 trades. I mean, sometimes you can set up the trade copier so it only executes the number of trades you want it to. But if there's sufficient capital and you're protecting your capital, you're doing it right, you've got your leveraging lot sizing set up appropriately, I could have a trade open on the euro dollar and one on the dollar Swiss or dollar yen, something like that, and they'll go right to their take profit levels all before the end of the close on Friday, and we end up with like 120 pips for the day. Those are good days, and there's very little retracement, and sometimes that'll happen as a result of non-farm payrolls or other economic data. It's not just non-farm payrolls. It doesn't happen all of the time with non-farm payrolls. Sometimes with non-farm payrolls, the only thing that I get is maybe one HL30 on the euro dollar, because it's like a non-event, right? The market's waiting for it. There's all this built up anticipation, yet still it doesn't really do anything and nobody really reacts to it. So sometimes I just get an HL30 for 20 pips. Every time it's going to be a little bit different. So I appreciate you taking the time to listen to me. I know that it's a lot of talking. It's a lot of explanation. I just feel that the more I communicate, the more I talk, the more you will then get to understand what's going on in my mind. Why I'm trading the way I'm trading. You've got to be comfortable with me trading for you, or the service isn't going to work, right? It's not, you're just not going to let it do its thing. And you need to be comfortable with who I am, because I'm the one who's doing these trades for you. I'm trading for you. I want you to understand exactly what I'm going through, how I feel, why I'm trading the way I do. I don't trade every minute, every hour. I don't feel that way. I don't scalp. I don't feel the need to always be in trades. And I've often said that I trade much less today the way I trade than I did in the beginning, the first year or two of my trading career. In the first year or two, I thought I had to be in the market and trade around the clock. I mean, I was only getting 3 or 4 hours of sleep every 24 hours and things like that. It was a mess. It was bad. I'm never going to do that again. It was horrible, and I was just destroying my health. I learned a lot about what sleep is and what it does, and it's very important. And I'm a much happier, healthier trader today. So you can expect that I'm going to be around for a long time because of the adjustments that I've made. But yeah, waiting for these signals and waiting for these trades and knowing when not to trade. Well, I have fewer losses, but now I just simply wait for the trades to come to me, look at these 6 major currency pairs that I'm analyzing and watching all the time, and wait for the trades to come to me. And I still make more in the course of a year than I did when I was trading around the clock and having a bunch of losses and a bunch of winning trades. It doesn't make any sense to do it that way. And it's stressful. It is really, really stressful to keep that pace. You can't do that for 18 years. It's hard. Try it. Don't try it. No, I shouldn't say that. Don't try it. Don't do what I did. When I share this stuff and I talk about, sleeping a few hours, I know it sounds, how do I want to say it? It sounds like these are the ideas that a lot of success is built on, right? A lot of guys will say, "Oh, I'll sleep when I'm dead." You should be. What are you doing when everybody else is sleeping? All that stuff. I did it. I tried it. I did it. It worked, and it put me through that learning curve. But I also looked back and realized I didn't really need to. But I had to get here, if that makes any sense. I had to go through all of that to get here. So I can honestly say that if you don't have to do it, if you want to start to do this on your own, don't do what I did. There is a way to figure out how to avoid it. But if you're starting from scratch, you're not going to listen to anybody, then you're probably going to have to do what I did, which was to go through it in order to know that you don't need to go through that. It's one of those things, right? I was a mad testing scientist when I put together this everything. I mean, just controlling my environment, learning how to get my family adjusted to what I was doing, because it really impacted my lifestyle. Like, I wasn't going anywhere for years. When I would go away, I live in California, so I would go to the mountains, and I was using AOL, right? There wasn't like the cable connection right away. It wasn't that easy to get back then in 2001, and the hotels weren't that reliable with their internet connection. So I would basically print off a lot of charts, keep them in 3-ring binders. They were blank, and I would just draw with a ruler, try to find patterns. I was looking for these continuation breakout trades, trying to figure out where consolidation ranges were. It was weird. I just did it around the clock. I was obsessive. I couldn't sleep. I would go to sleep maybe on Saturday and fall asleep at like 9, 10 o'clock, trying to get into a normal rhythm so I could be with my family. And then I would wake up at like 1 or 2. Because that was my schedule, and I would just sit up and start looking at the charts. Even though the market wasn't open, if I was home in my home office, well, then I'd start rolling the charts one at a time, one candle at a time, just role playing what happened that week, and I couldn't let it go. It needed to be done, but anyway, at the same time, please be very careful. I mean, if you're going to have that approach. So I'm a very healthy, conscious, protective of my environment, protective of my behavior, so that I can trade better. You know what I mean? It's all about so that I can control my trades and my environment so that I can be a better trader. That's what it all comes down to. So thank you again very much for listening to me. If you use the trade copier, you're really going to enjoy and appreciate the results. You're going to get solid, consistent results. Very cost effective. Again, if you're using a standard lot, of course, you can use it on a micro, mini, or even a half a standard lot. I can't control that. I can't tell you what to do with it. But I'm just saying, I just want to share with you that based on what I'm charging for the service, it would make much more sense that way.